Good turnaround Tuesday to everybody. Hi, I'm Dale. How's everyone doing today? Before I get started with my analysis, hats off to Steve Volge for gutting out the guppy here. Hello, David, Arif, Glenn, Patrick. Never took out the highs. I actually thought it would. Now we have a breakdown. Also, the euro yen could be failing here as well. Maybe it grinds up, but with euro exploding, this is a pretty negative candle here. But this is really the story of the day. Okay, so we had the breakout over the weekly line. We have a throw over on a rising wedge. It's not a third drive. Absolutely nothing but a guess to top pick up here, although it is Tuesday. The most bearish thing euro could do now is close back under the 115 level. Prudence over valor, wait for it to negate the breakout or start to at least give you some type of divergence signal, which you don't have. You have a confirmed high on the 4. There it is. I believe you have a confirmed high on the 1. Starting to diverge, but a lot of momentum with an 80 reading. Okay, congratulations to you, Arif. So it's interesting, this is right out of the hopper on our blog. It has the euro pound run out of steam. Great blog post. Hot off the press from yesterday, and we're above 61.8 on the retrace. I was looking at this, and Steve looks like he actually could allow for another high, and Blake's look really focusing on this 88.75, which we took out a little bit here. And Grega's look on this blog, I believe that this recovery has exceeded some of his expectations. Looks like I thought we'd stop around 88.50, 88.60. We're above 61.8. So the way I look at euro pound, you guys need to read this blog. It's great macro stuff. The way I look at EG is it's kind of a low beta way to top pick the euro. All right, euro making new highs, euro pound not. So if this turns out to be a failing rally, it could be a big trade. I'm not saying we can't go 78.6. Possibility of another new high, but if you felt bad because you missed this last week and we're waiting for an opportunity to get short, we're certainly in that zone. Give me a wide. If you're with me on my analysis, you definitely do not have to agree with it. I just want you to understand it, you know, put it into your trading cap. Always do what you think works for you with your methods, your risk management, whatever triggers you use. Just want to point this out. So you could read the blog. This could possibly end up being the top of B. Turnaround Tuesday, and the euro yen as well could be setting up, but the big home run from yesterday was the guppy. So looks like you have to sell any rallies in the guppy. I'd be very surprised to see us challenge these highs again. I think the best you could look for is maybe a rally back to 640, maybe 660 with a 100 pip stop. We should most likely now start heading towards those lower objectives I talked about last week. 44.10, 38% back. Thank you, Cyric. We have a great guest today. It's taken me years to get at 50 pips to be with us, and Face is fortunate enough to have him come in today. So I know there's great interest. Almost anyone I talk to on the Twitter sphere has nothing but great things to say about 50 pips skills. So Stick around for that interview. I know Blake likes to talk before the opening, so I'm going to hand off the ball to you. Blake, how are you today?
I'm doing all right, Dale. How are you?
Good, buddy. What's
So,
on the radar? Huh?
Well, there's a few things on the radar right now. Sorry, I had to yawn out there. It's
Blake, when you have a hard time falling asleep at night, you have my number. You could call me. I'll talk for 10 minutes and you'll go to sleep.
Well, first and foremost, I want to say having 50 pips on the webinar, that's going to be pretty cool. I've never heard him speak, so I know he does webinars. So some of you already know what he sounds like. I'm not sure what he sounds like, so it's going to be interesting to hear him. But that's going to be cool. So for those of you that are, make sure you stick around today and listen to that interview. It should be a really good one. So good job getting 50 here. As far as what's on the radar, I mean, obviously the dollar's on the radar. I mean, we've got the euro blasting the new highs. The pound is underperforming now. You were talking about the euro pound. One of the big issues with the euro pound right now and why it's bounced so aggressively is the weak inflation data out of the UK. Now, I would agree if you're going to short the euro pound, this is probably not a bad place just because you're at the at a 618 retracement here. So it's had a nice bounce back. The only problem is, like I said, you're dealing with a weaker inflation data out of the UK, which is a little tough to be a buyer of the cable as a result. But there's a lot of volatility right now, and I think a lot of it is just we're kind of bypassing the economic data, so to speak, where the market is really focused on just some pretty good volatility. This is good volatility for what we're seeing in the summertime. The other big mover out here, and I'm going to have to point out the Aussie. I'm going to take you over to the daily, and I'm not shorting the Aussie. So just let's just get that out of the way. I'm not.
No, Blake, you were hip to the breakout before it happened. You displayed the Aussie chart threatening the breakout that manifested.
Yeah, when it broke about when it broke about 77 cents, that was pretty much it. But we've rallied pretty sharply since then, and I'm more concerned at this point with us probably being a little overextended. The daily chart's obviously a little overbought here. So if you're long Aussie dollars in any way, shape, or form, you've got to start being a little proactive. I think raising stops to break even, just being careful with longs at this point. That makes sense to me. Shorting the Aussie, not my cup of tea. I'd rather be a buyer. I'd rather, me personally, I'd rather, see it do a little reset here and then get long. That's how I'd like to trade the Aussie. I'm not sure if I'll get that move, but that's what I'd, ultimately like to see. The Canadian continuing to get plowed here, still looking for a bounce, but this, obviously with the healthcare bill looking like it's going to be shelved at least for a few more weeks. I mean, that's weighed on the dollar across the board. So the dollar Canadian came under pressure. The Kiwi still really struggling to break out, and this is a concern. I mean, if you're long the Kiwi right now, you're probably looking at the Kiwi going, what the hell? We've seen the dollar pretty much break down against most everything but the cable, and it's not doing it here. So you got to be a little cautious. I did cover my U.S. dollar Japanese yen shorts. Now I covered them a little early, but I saw the 200-day coming up here. I still think we complete the head and shoulder pattern. So just if you're using ForexAnalytix and you're like, oh, this pattern in play, Blake already closed it out. I personally did, but that doesn't mean that. That doesn't mean we still can't get down there. I just, I tend to be a very active trader. So I'm still, I look at this going, well, ultimately, I think we're going to get here, but can I get a better price being short maybe there on the way back down. Because if you look at equities, equities are looking kind of weak this morning. Here, let me, yeah. And
You know,
this is,
Blake, you know, I think it's actually a great quality that you don't try and squeeze every last pip out of every trade. And, you know, you're never going to go broke taking profits. And, you know, I think a lot of people try and be too perfect in their trades. And I have a saying, you can't expect perfection at the crap table, buddy.
yeah, I mean, you know, trading is it's not an exact science, and if it was, we'd, you know, I mean, I would be a gazillionaire if it was an exact science. So it's always smart to take profits along the way, and ultimately, you know, I look at the dollar yen here, and I just know we're at support. So, but the flip side to that is, Dale, if you look at, you know, if you look at like the let's just take a look at the equity markets. Like, you got the S&P. The S&P is really wrangling with some support here, and if the S&P breaks into new lows, that's probably going to drag the dollar yen down, I would suspect. And you got, you know, also, if you look at the NASDAQ here, here's the NASDAQ. Also, you know, at like a little breakout point, I have to go over to an hourly chart to really show you here. We're right here at support as well. So watch the equity markets. I think if the equity markets, you know, start to show some weakness, it is Tuesday. I'm sorry, I didn't mean to yawn. It's just, you know, that's the problem with getting up so early like we do, Dale. I yawn because even after years and years and years of getting up as early as I do, I still wrangle with it. And you're pretty good. I have to admit, you do good.
Well,
You know,
how many hours sleep do you get, brother?
You know, I go to bed like around 9. I get like 6 hours of sleep, maybe 5 or 6. You know, it depends on the night.
That's enough for a Marine.
It is. It really is. It just, I don't know why I still yawn. But then again, my mom would call me a sleepyhead. So, you know.
You know, it's also a release of tension. Yawn is a release of tension too.
Is it? Well, I got a lot of tension, so woo, there we go again. Just kidding. Just joking. But anyway, I think you got to watch equities here. You got the NASDAQ that's sitting on support. You got the S&P that's sitting on support, and you know, a lot of the rotation has been into the Russell, and you got the Russell right at all-time highs. You know, and so, you know, we still have this rotation happening in stocks, but you know, if we start to see a little bit of you know, selling across the board, where you see, you know, the NASDAQ, the S&P, the Russell, the Dow, you know, you see all the indexes come down, that's when, you know, you might see that exponential yen strength. And right now it's just, you know, kind of meandering, and we're not seeing that really happen, because, you know, you notice all the yen pairs are kind of acting like the stock market. You've got the dollar yen up, or dollar yen down, euro yen up, pound yen down. Pound yen's actually, you know, I mean, we talked about this yesterday, Dale.
Very ugly. Yeah.
What a big rejection there, huh? You know, you got the Aussie yen up, the New Zealand yen down. So you've got like and the Canadian yen is slightly higher. You've got these yen pairs acting kind of like the stock market, like there's rotation in the different yen pairs and out of certain yen pairs. But I think if you see all the stock market indexes start to move together, you might get all the yen pairs moving together as well. So that's just a little food for thought. And I have to tell you, I started buying some dollars. I bought some yesterday. I went long a little bit of dollar Canadian, very small. I went long a little dollar Mexican peso yesterday, very small. And but I started buying actually some more dollars today, because we have now completed our head and shoulder pattern on the dollar index. We're at channel support or near channel support. You can see the channel here. We're at the 786 retracement. So I think the dollar has the potential to start rallying, and I don't know if it's today, but it might be over the course of the next couple of days. So I'm willing to give it a little bit of room here. I know we are now into oversold territory with relative strength. So once you start getting down to these, levels and relative strength, that the dollar risk is bouncing, because that's what happens when you're this oversold. And I had somebody tweet to me, and I don't know who it was because I just blocked them. When somebody tweets me stupid stuff, I just block them. And one guy was like, RSI, another useless indicator. I'm like, that to me is such an asinine comment. And I say that about any technical indicator. A technical indicator, as long as it gives you consistent results and outputs, it's not the inconsistent, it's not the indicator that doesn't work, it's the person using the indicator that doesn't work. That's the problem. It's not, it's not the indicator. That's why I don't bash other people's technical analysis. Look, how you look at a chart is how you look at a chart. How you use the tool is how you use the tool. I always tell people, technical analysis, or like if I show you a chart, it's like, okay, I went to the hardware store, I bought a hammer, I gave it to you. I went to the hardware store, I bought the exact same hammer, I have it in my hand. We both are looking at the exact same nail situated in the exact same piece of wood, and when we swing the hammer, I might hit the nail in flush, you might hit the nail in a little cockeyed. Is it the hammer's fault?
Yeah.
No, it's the person swinging the hammer.
Don't worry about that guy, Blake.
But I don't even.
You blocked him. I put a contract out on him. RSI, no one attacks RSI.
No, I mean, I don't even care who the person is. It's completely irrelevant. I don't even know who he is, and he doesn't deserve to follow me. So that's I just block him, because it's like, I don't even say anything. I just, like, hey, well, if you don't find what I put out valuable, then you're not privy to it. So I'll just get rid of you. But the point is that when you look at an indicator, first of all, when you're looking at technical indicators, you're looking at a multitude of indicators, typically, so like if I look at RSI is not the only thing in my equation that I'm factoring in. But again, to say a technical indicator doesn't work, I think it's silly. I think you can overcomplicate your decision making by putting on too many technical indicators, and that is a little overbearing for some people. But to look at anything that you see on a chart that is an indicator that has been given to you by technicians decades and decades and years and years ahead of you, for you to just dismiss it like it doesn't work, it's crazy. It's how you use the indicator, how you use the culmination of the indicators that you're putting to work. Again, how you swing the hammer. And I don't ever, Dale, profess that my way of trading is the right way of trading and it's the best way of trading. And there's, and if you follow my system, you're going to make $1 gazillion. I never, ever say that, because it's how I specifically use it, and it doesn't mean it's going to make sense in your head. And so I show you the tools that I use, but doesn't mean that's the right thing for you. I know a lot of people that use advanced decline lines, and oscillators. They use VWAPs. They use all sorts of different things, and it's to each his own. But to dismiss something as, oh, it's useless, no, you're useless. You know what I mean? It's not. I'm not saying you in particular. I'm just saying that the person that's using the tool is the one that is really the issue. It's not what you're seeing on the chart. It's how you're using that specific output, because the outputs that you see on charts, they don't lie. They give you what they take the inputs that are given to them and then spit out the data as a result of a chart. So anyway, I just had to say that because when somebody made that comment to me, I'm like, dude, you're an idiot. And again, I don't know who it is. I just, you know, I just
As a friend of mine says, Blake, people. And, you know, people say the same thing about, oh, I got burned in FX or I got burned in options. It wasn't FX or options that burned them. It was, you know, it's not the vehicle, it's who's driving the car.
Exactly. That's precisely it, Dale. And so anyway, I sorry, I didn't mean to go on a little tirade here, but I am looking at RSI, and if you look at RSI, typically down here when the dollar gets to these levels, we become oversold. And look, I'm not a dollar bull, even though I'm buying some dollars right now. I am very much a dollar bear. Okay, as I have been for several months. I just think that you get to certain levels where the dollar becomes, you know, oversold, and it becomes, you know, towards prices that you have to start paying attention to. And right now, I think the dollar is in that zone where, you know, if you are short, you've got to really start being careful at this point. I don't know if it, you know, we're at prices where you could start seeing a dead cat bounce. And if you're an active trader, then you have to pay attention to that, because you could see the dollar whip around on you. I'd like to see how the dollar closes over the next couple of days, and I think a lot of it's going to have to do with the ECB. You know, the market is looking for the you know, the ECB on Thursday, and, you know, hoping Draghi might be a little dovish, but, you know, Draghi already mentioned that you know, that the meeting in Jackson Hole is going to be the more important, where he's going to discuss monetary policy and possibly change monetary policy. So I think the selling that you've seen, or maybe the buying in the euro, excuse me, as the market is expecting a hawkish ECB, you know, that might unwind a little bit on Thursday. So, and I don't know if you're going to see any euro weakness ahead of that, but it's possible. I think the euro's, you know, getting a little frothy up here, but you know, let's also, you know, accept the fact that the dollar is weak, and it doesn't look good. I have to admit, it doesn't look good. You know, the dollar looks pretty fugly here. So anyway, those are just some things that I'm paying attention to, and I'm really and by the way, I did get out of my gold longs. I actually got out of them last night at 12:37. I was long gold personally, you know, as I was playing this inverted head and shoulder pattern here. Yeah. Okay, I was long gold, and I got out of it last night when we were right here at 12:37. We did make another push higher, but we're closing in on that that head and shoulder completion. We still got a couple more dollars, so I mean, you know, the gold can still go higher, the dollar still can go lower as a result, but you gotta be a little careful here. I think you gotta, you know, again, be on guard, and you know, start watching what you're doing a little bit more cautiously. I think the easy money has been made with dollar weakness at this point. You know, can we get a full on capitulation of the dollar? That could happen. That's not out of the question. Like the euro rip another 100 pips and then come back down again, that could happen, but I don't know if we're there yet. I don't see it just yet. Yeah. Good morning, Steve.
Good morning to you. Good morning to Dale. Good morning to everyone.
Good morning, Steve.
I would honestly want to see some kind of a magazine headline as the one we had, like King Dollar, just a few days before the dollar reversed. I would really want to see some kind of a, you know, big magazine or you know, financial site or whatever, like a post like, you know, dollar is, you know, dollar will be destroyed or something like that. That's going to be probably the best timing indicator for an actual reversal in the dollar. I mean, you know, usually you see titles like that at, you know, the very bottoms or the very tops of the market.
Steve, sometimes you see rock stars and movie stars starting to ask to get paid in euros. I've seen that before. Okay, or
yeah. That's the Giselle.
Yeah, or countries. That's something to look out for.
Although we have to be honest, sometimes we use these kind of things as indicators, and we tend to remember the ones that actually worked, but we don't remember those that didn't. For example, I remember which was that? I think it was an actress. It was a woman that said that she had put like a big part of her worth in a passive SPX index, according to what her financial advisor had told her, and that was when the SPX was at 1,500. And I remember that everybody was calling, this is going to be the X person. I don't remember her name.
I know who you're talking about. It was Ashton Kutcher's girlfriend.
Yeah.
No, Demi Moore.
Mila or no?
Yeah. Mila Kunis. Yeah, something like that. Yeah. So everybody was making fun of her and like, this is going to be the top for sure, etc. And we're currently like,
the market's doubled since then. No, but in currency, I think the currency is a little different, though. I think that
I agree with you.
They extend themselves way too far in some directions, and people start to get super emotional. And the thing about currencies is they typically don't go to zero. Since their exchange rates against others, so but they do get a little frothy, and we might be in a situation like that. But like I said, I think the dollar. I think the dollar is due for a bounce soon. I don't know if it's going to be this is the end all be all, and the dollar bounces to new highs. But I think that the dollar is primed for a bit of a bounce. So you have to start being cautious about being too bearish at this point. Especially if you've been riding it to the downside.
There's no reward to be short at current levels. I mean, if you've enjoyed this run, fine, but. At the moment, it's it obviously makes no sense whatsoever. To be honest, though, I really want to see if this kind of huge moves we have today is going to be followed by the stocks, Blake. I mean, I said yesterday as well, we had seven days in a row that we were up, so I did expect like a small. Correction, but I don't know what is the level you're looking for in the SPX, having to do with a key level to accelerate to the downside, because
it's right here. It's 2450. I mean, we're at 2454.
Yeah, that's the first soft support. But what about lower? Because I really, yeah, exactly. Because I really think that unless we see a break of 2400, there is no technical damage done. That's what I think.
No, it's still bullish unless 2400 gives way. But we could see, a nice pullback in the equity markets, and I think that's what that's something that we got to be on the lookout for, because that kind of move can provoke a lot of volatility in the currency market. So. But hey, I've got to be around for the open. I'm going to pass it over to you guys. Steve, I hope all is well. Look forward to. I'm going to tune back in about a half an hour to listen to 50 pips. So you guys have a good open.
Perfect.
Thank you, guys.
We have quite a lot of things to talk about here. Because obviously, these moves are, have been, quite strong, especially, for European hours. And I'm going to start with obviously the USD yen, because we have been monitoring this for some time, and I know Blake started with it. It's not only the 200 EMA. As you remember, Dale, we have talked about this zone, since the day we got rejected, and we're actually now on top of it. So this is the do or die level to see what's happening here. Obviously, a rebound from this exact level is, maintains the USD yen, with some bullish momentum, while a break below it complicates things technically, because a break below here then, can even open the possibility of a double top here, because in essence, that's what we had so far. But this is a critical level. We have the horizontal zone, we have the 50 DMA, we have the 200 DMA. Just above it was the descending trend line from here. Actually, if you redraw it a little bit, it can also coincide. So, this is going to tell us a lot about the about the yen pairs. And the reason I'm saying that is because since we mentioned before the pound yen and the euro yen, this is now what's going to actually indicate what happens here. For example, in the pound yen, this can end up just being an ABC, which means that we will see a move towards 145, which is the top of this zone I had indicated. So we might actually bottom out quite soon in the pound yen if that's the case. Otherwise, breaking below 145 decisively, especially 144.50, then opens the door for the second scenario, which is a test of this ascending trend line. So this is one thing I'm looking at. I'm obviously still short, and depends on what happens here. I might even take 50% profits because, as I said, for me, there is still a high possibility that the bottom is not far away from here. It's just a few pips. Now, having to do with euro yen, obviously we need the euro to play some ball here. Sorry, let me open it here. We need the euro to play some ball here. Okay, this is what we were looking at yesterday. Either a breakdown from where we were the day before yesterday, actually, or a little rebound and then a second move lower. If that's the case, then 128 is 128, 128.20 is the level to watch. If we see, a strong rebound from there, then perhaps that was just a shallow ABC correction as well. So, the yen pair so far, I mean, euro yen and pound yen have played ball, and they have given us some downside as we expected. The question is how deep those corrections are going to be. Because for the time being, we can only treat them as corrections because the moves higher were impulsive. So we cannot simply say that, okay, that's a real reversal. That might just be corrective. And we maintain this bias until it proves to be otherwise. Now, having to do with euro pound, obviously we have Carney speaking, I think more or less now, and that might put it at risk. But as we've said many times, when you're looking for a market to reverse, you pick a very tight stop loss, because it's an attempt you might have to do 2 or 3 times to get vindicated, actually. And the only thing that's going to save you from being wrong more than 50% of the times, which is going to more or less happen when you're trying to pick tops and bottoms, is tight reward to risk ratios. For example, we had talked and we had shorted the USD NOK right at the highs. Look what's happening today, by the way. I told you that the day before yesterday, very specifically, that in my opinion, this is a great trade, and all the NOK pairs are a great trade. And the reason is simply because they seem to be lagging the USD CAD. So we said that this is a 1, this is a 2, this is a 1, a 2, and a third of an extended third wave. And you see the acceleration we got. That's the reason I explained yesterday that I didn't decide to take any profits, although my targets were 817 and 815, this area here between them. I decided to pull out my 50% order. By the way, this is a trade that we took from here. So I mean, at that specific trade, I had risked 0.75% of a move, and currently, this move has already yielded almost 6%. So this is the kind of trades that vindicate.
You have some adrenaline going this morning, buddy? You know, admit it. You're excited. It's exciting to be in windfall profits, isn't it?
Yeah, that's not bad, to be honest.
Yeah,
but yeah, more or less, I have adrenaline for other reasons.
Do you love yourself today?
No, it has nothing to do with that, trust me.
Oh, okay. All right. I love me today. All right. Anyway, Steve, really great trading. I just, only because of market reasons, do you think this is a good area for people to be ringing the register on the long Aussie Kiwi that exploded from last week's call?
Okay. Let's go
Just in case it's there, you know what I mean?
yes. So let me
'Cause I know a lot of people in the room went with it, and they're, you know, probably up 250 pips or so.
Yes, yes. You know very well that my drawings are there and I keep them there.
Yeah.
So the question is it a good level to take profits? I
Yeah,
thought that a good
exceeded-
level would have been 1075, and we slashed
Right.
through it like it was butter, right?
Yeah, yeah. Still not a bad time to take at least half off, right?
Yes,
Because-
although you know something, Dale. From a basic technical analysis perspective, this is an inverted head and shoulders. We had indicated so
Right.
before we even crafted this shoulder for people that were watching here. I specifically said when we were here that I maintain a bearish bias in Aussie Kiwi, unless
You bought the red candle,
thing
Dave.
that could,
I remember.
yeah, unless
Pull
what we no, I didn't. I bought this hammer actually.
Right.
I said,
Oh.
unless the only thing that can save this from being a bearish consolidation would be rebounding strongly from here and creating a right shoulder. And actually,
So
I didn't expect
stay long looking for the breakout over 108.50.
You know something? What I'm seeing here is that this is an impulsive move, and this can easily be like a 1, a 2, a 3. So if you're asking me, what I'm seeing now is probably,
Yeah.
let's choose the right colors. There we go.
Pull back from the line and then break out. Okay.
Yeah, that's quite likely now, huh?
Yeah.
I mean, this move is very strong to ignore or to consider corrective. I mean, it can be, but at the moment, especially, I'm really lucky to be. I bought this hammer, by the way, when I meant hammer, not this one. Sorry, this one. When we actually closed, I said it before. When we actually managed to pull back all the losses that we suffered that day and actually close above the neckline.
Yeah, that's a red candle I was talking about. That you.
Yes, and you're absolutely right. Sorry.
It's okay. You know what? I remember others' trades more than they do.
Yeah, you're absolutely right, actually. So what happens here is I think that we will see at least one more leg higher. So any pullback to probably 174, 175, 173, I think it's going to find more buyers actually. And if we get a break above here, and especially now projecting forward, if we get a break above here, things will start changing a lot for the pair. And I remind you, we even had a look last week. Yesterday we had a look at the weekly, and that even shows, because the weekly can filter out a lot of noise, and the weekly actually shows a much cleaner picture, because in the weekly this ascending trend line here actually held like a champ plenty of times. And this is the one we saw on the daily as well. So this is what we drew yesterday, and we said that okay, on the weekly it shows like we're going to have a test of this line before we actually determine what's going to happen from here. And as it seems, that's going to be the case. I think we're going to go up to 109 one way or the other, and then we're going to see what's going to happen from there. Obviously, a break above here, and especially above this level, is very bullish, because I think that then it's going to lead us back to 114. So this trade now has actually potential. You know what I mean? One level at a time, of course, but it has potential. Okay, now having to do with USD NOK, I would say that we should soon see something like this, and this is a good zone for that to happen. Okay. This is more or less what I expect. Because as I said, the pattern is pretty clean. So I think we are very close to the end of the third of the third. So I think that the easy move lower, which was the third wave, big part of it is over. So if you haven't participated already in it, I think, you know, you're a little bit late for the party. Although, if you short the first rebound, you're probably going to find yourself in the money once again. So if you see a rebound to 815 to 817, this is a nice zone. We were looking at it as support. Now we have to look at it as a resistance. So if you get lucky to get something like this, I think this will yield at least one more push lower, at least, if not two. Okay. Same applies to the USD CAD, which is a little bit more progressed. I think it should soon give us some kind of a pullback, soon, really soon. And the area we should be looking for as resistance now is the one we were looking for as support, 128. If we get 128, probably that's going to produce one more push lower. As you see, this is an impulsive move. It's a very clean impulsive move. It's a channeled impulsive move. Just by monitoring the angle of the channel, I mean, you don't need to see anything else. You can distinguish impulses very easily because look at it. There is no overlapping. Short, small in duration consolidations, boom. Same thing, boom. Same thing, boom. I mean, you know, this is how an impulse works. And that's why we warned many times. I remember people asking, you know, plenty of times from 130, when is this thing going to rebound? Is it going to rebound from here? We kept saying, no, 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 no. I mean, it might, but the structure says that you shouldn't be looking for a bottom. You should be looking for a continuation. And we got that plenty of times. I bet a lot of people have been burned trying to bottom pick this. Okay, let's see about more questions. Any thoughts on EuroCAD? Yes, actually, we have thoughts on EuroCAD. Okay, it seems to be trying to build a base, actually. And that's why yesterday at the close of the candle, when I was doing analysis, I finally took 50% profits of this position. So I'm now running with 50% of my position, and my stop loss is here at 148.50. I've put it just above here. So I finally booked half of it. And I would still be in favor of seeing another move lower. So perhaps what we get to see here is we might go here and get a rejection and then see a move lower again. That's likely, actually, because this zone 146.50 was support. It can act as a resistance. So I'm still in favor of seeing one more push lower, perhaps to this zone. At the very minimum, I would like to see the 144.46, which is the 200 EMA, the gap close, and the ABC quality target here. It might even go lower than there, but anyhow, this was a good run from up here, so I booked half of it. But I remain bearish in outlook. I mean, we do see an attempt to make a little bottom here. But if I had to choose if I would be short or long from this point, I would still choose to be short. So that's my outlook about it. Now, about my other position in Euro-Aussie, I think this is also working very nicely because we got rejected from there, and we are now below this. So I would say that I had this target, this targeted that zone there, targeted. As you see, my zones are always clearly indicated. I mean, I very rarely change them because, you know, I go back and have a look at where support resistance has been strong. But if we do an equality target now, do you see this? It's also on the top of this zone at 144.73. which also coincides with the top of this zone. So I would say that the likelihood of seeing this print 144.50, 144, 144.80 is quite high. So I would consider a continuation lower quite likely before we at least see a rebound. Kiwi, yes, Kiwi and Aussie actually. Obviously, we need to have a look at them. Okay, Blake has gone through it plenty of times, and we've said that he has said, and I definitely agree with him. this was a very big formation. Okay, this was a triangle that was taking place since the very beginning of 2016, and we finally broke above it. We've actually traveled we've actually traveled like 400 pips within 8 trading days. So what happens from here? We've had a huge overthrow of this ascending channel. We've had a clear penetration of this zone, which most probably also brought part of the acceleration we saw, because I'm sure that a lot of stop losses were positioned here. So what happens from here? I think this is a third wave of some kind, and I think being overbought in plenty of time frames, we should see some move lower. But I think that this should yield at least one more high to 0.80 before we see what happens. So a short-term view on the Aussie USD is that a pullback should be imminent, but most probably you should not be looking to sell that pullback, because more than likely you're going to find yourself being out of the money once again. So I would like to see a pullback, another high in the Aussie USD, and see how it reacts from there before deciding what we're going to do. Obviously, and it's also apparent from Aussie Kiwi, the reason that we haven't penetrated, the fact that we haven't penetrated above this high in the Kiwi is, is something that's troubling. As Blake said, obviously, if you're long the Kiwi and you're seeing so many other commodity currencies breaking one level after the other, and Kiwi struggling, definitely doesn't feel good. So, if you're long the Kiwi, obviously today's candle, for example, is an outside white candle. This is a bullish candle. There's no question about that. And seeing another high in the Kiwi is quite likely. But the question is the following: why would you be long the Kiwi against something and not one of its counterparts that seem to be performing better? So even if we make an assessment of what's going to happen with here, which, yes, another push higher is likely, probably this is not what you should choose to be long at in comparison to other alternatives that you have. So that's what I think about the Kiwi. AussieCAD. I can tell you one thing for AussieCAD before we even look at the chart, which I haven't looked for in a few days. Why would you want to be short or long the AussieCAD when both of these currencies have been overperforming and are strong? What I'm trying to say is the following. I know it sounds very basic, and you've heard it many times, but the question is the following: why would you want to be long or short a pair that is consisted of a strong currency against a strong currency, or a weak currency against a weak currency, and not choose a strong currency to be long against a weak currency, or a weak currency to be short against a strong currency? So just look at this price action. Why would I want to be involved with this? This is likely, for example, in a triangle. Let's see. This can be a triangle, like a very big triangle. Might have another thrust higher now. It might. Okay, it might. So you might be long and make good money. But, my personal point of view, why? You like Aussie, for example. I don't know if you like it short or long, but let's say you like it long, so you like Aussie. Why would you want to be long Aussie against the Canadian, which is also strong, and not against something else that underperforms? Pound, yes. Okay. A simple read on the pound. We had made several attempts to penetrate through this zone. We finally did so, and we're currently retesting that same zone as support. Obviously, it is impossible for me to tell you that I would be short here. We haven't managed to penetrate through any serious support zone since we found that low here, which actually that low was perfect because we found that low exactly where we were looking to find it. You know what I mean? It was a 200 EMA. It was this resistance that this time acted as support. And then we had an impulsive move higher. We had a clean ABC correction, which found a low at the 128 zone, as we had said. I remember I was writing analysis these days, you know, when we were actually moving lower, and I had said since the beginning, it's the exact same situation with the SPX and the 2,400 level. Unless you see a break of, you know, 128, you can't be bearish. That's what we were writing when we were correcting lower. So now this applies double, because unless you see, you know, a break below this 130 zone, obviously you have done nothing. But even if we do see that, then we are up against the 128 zone once again. And, you know, I mean, for a scalp or whatever, fine. Obviously, if we penetrate through this zone, then you can look for another retest of 128. But, you know, being short outright, you know, the cable here, I think there are better opportunities out there. You know what I mean? Today's candle is bearish so far. There's no question about it. It's an outside black candle, and it's actually a shooting star as well. So today's candle, you know, if you like it to the short side, you know, it's good for you. It's really good for you. But I'd rather be involved with things that are much cleaner. Kiwi yen.
And
My pleasure, Arif.
Okay, there it is. There's 50 pips. Okay, I see it 50. Thank you.
Kiwi yen is actually more or less working as we expected, and to be honest, I have to see the shorter term structure, but you know, this might be enough of a correction. I did believe that we're going to see a new high. You saw it, we drew it there. I did believe that we're going to see a new high after correcting lower, and to be honest, this correction depends on how you read it. I need to go to a 4-hour chart, might even prove to be enough. So would I be short the Kiwi yen at the moment? No, I wouldn't. I believe that the Kiwi yen is going to produce one more high. I really do believe it. So be very, very careful. We might see another thrust lower. We might, up to 81, for example. We might, but this might have been the end of the correction. So if I had to be something the Kiwi yen at the moment, if I had to, and especially considering just combine, because, you know, to see if somebody is also consistent, and to test yourself if you're consistent or you have some divergences with your biases, you also need to test, you know, other crosses. For example, what did I tell you about the Kiwi, the NZD USD? That it's likely that we're going to see one more high. What did I tell you about the USD yen? That I think that it's currently on support. So this also bodes well with the possibility of seeing another high in the Kiwi yen. Okay, so be very careful. My belief up there was that we would correct lower and then we would go for another high, and it remains as it is. Okay, let's see what else we have. My pleasure, Dave. I mean, my pleasure to give you analysis, guys and girls. Ronit, let me find your. You talk about a cap and handle. Let me go up to find what pair you're talking about. A cap and handle. Pound USD cap and handle. Okay. Let's see. Oh, you mean this one? Yeah, you might be right, actually. This is what, yeah, and you know something, that's a very good point. Thank you very much. That's a good eye. Okay, cap and handle formations are continuation formations. And what Ronit says, and he's right, is that this is a cap and handle formation. And he's right, actually. In which case this support points higher. I mean, from this point of view as well. So he's absolutely right. Thank you. Thank you. Good eye, my friend.
Steve. It's Vera here.
Hey, Gregor.
How are you, mate?
Join the party, my friend.
You know what? I just joined in, and if you give me 5 minutes, I want to take a look at crypto.
You already have the screen, by the way, my friend.
Yes, because we have some really nice bounce, and I know that there's a lot of interest in Bitcoin and Ethereum, so it may not be a bad idea to look into those.
Go ahead.
Was Nick here today?
I don't think so. No, my friend.
Okay, so because I'm wondering what are her views on Bitcoins. Anyway, so with members, we were tracking actually and expecting a free wave retracement, and was looking for a deeper ABC pullback. Now, normally when market will make a free wave retracement, you will see a reversal back to the area of a former wave 4. Okay, so if we take a look on this daily chart, we can clearly see that there was a free wave decline perfectly back to the origin of a previous wave 4 swing.
If I may say so, Gregor, we also had a morning star formation on the Bitcoin, a huge one.
Here at the bottom,
yes,
right?
Yes, a huge one.
Yesterday. Yes. And actually, I thought firstly that we will see a slightly more extended wave C because of that very strong drop lower, which I firstly thought it's wave 3 of wave C. Let me switch to 4-hour time frame. So I was firstly looking for slightly more weakness, but because of this bounce that is now lasting for a second day in a row and clearly in impulsive fashion, I think that there is a strong possibility that we will continue higher. Steve, as you know, we need minimum 3 waves to the upside, even if we just staying bullish, or even if we go into something more complex here, you still would expect 3 wave rally. So if we can take this upper channel resistance line, I think that we are going to retest those highs for Bitcoin around $30,000.
If not go higher.
Yes. So actually, we really have to listen to the price action and trying to ignore what I think I was expecting some major sell-off, but it appears that we are not there yet. The price action, the price structure itself.
Yeah, this is a V-shaped recovery, isn't it, Gregor?
Yes, and I just think that we will see higher prices, and maybe then we will see another final collapse. It was what, 50, not 50, but what, 30% pullback, and from the highs here on Bitcoin. So it was quite a deep pullback. I just hope that not a lot of traders, investors were involved here. So if any new investors want to get in, then maybe now can be a chance, but definitely get out if we go back below this recent low. Okay.
Yeah,
but
because then it's a collapse.
Yes, but personally, I would wait on some kind of a pullback here. Okay. Same thing or similar thing can be on Ethereum. Also, there we had also a free wave decline. Okay, again a triangle here for a wave B. So I labeled it as a wave 4. It can be also maybe wave B, but whatever. The fact is that short-term direction stays the same. We reached the support area of firmer wave 4, and we are now climbing higher. So again, keep an eye on this trend line. If we can take this trend line out, then I think that we will go much higher here on Ethereum as well. I would look for first upper side at this wave B levels, which comes around $300. It's also a nice round level. Actually, this can be also formation of still in progress of bullish head and shoulders. Right shoulder, head, and now left shoulder, head, and right shoulder could unfold in the next few days. So watch out for this setup as well. As I said, if we see broken trend lines on both markets, I think that we will see higher levels. Okay, so that was my 5 minutes.
Very nice.
Yes, I just think that we have some very clear wave structure, especially I was looking actually for this to happen, but since we got this very strong confirmation in the last 48 hours, I just think that it's worth to keep an eye on it. Okay. But
Thank you, Greg.
don't get me wrong. I'm not trading those markets because I just don't like to be involved in something that it's not regulated as it should be. So I'm
totally with you there. Totally.
Yes,
but a lot of people are interested, so we cover them, and
yes,
there is definitely the problem also is that these are markets that you can make or lose a lot of money in very little time. And usually, you know, I don't like these kind of dynamics on a personal level, of course.
Yes, yes, I agree. Okay.
Okay, everybody. Welcome 50 pips to our
Enjoy the
community.
interview, Dale. Thank you.
Hello, 50. I'm waiting to hear your voice for the first time. See your screen. You are now the presenter.
Hello, 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 test.
Yeah, I can hear you. I can hear you, 50.
Hey,
Great
can you see my screen?
Yeah, I can see your screen. It's a big rectangle.
Okay, so I think I have to choose which screen. So hello, everybody. Is there an icon to choose which screen you want to show?
Yes, when you screen share. So, you know, I see let's get started. So
So you've got that screen up. Okay, so, change presenter, show screen. Okay, screen. Oh, okay, good. Okay, so there's a bunch of, okay, so you should be, can you see the,
yeah, we got the VIX right here.
okay, so
please, I'd like everyone to welcome the renowned FX trader and rapper, 50 cents. No, I'm kidding. 50 pips, how are you? It's so nice to meet you, buddy. I've been trying to get you to talk to me for what, 2-3 years now?
It's been a while. So hi everybody. So thanks, Dale. Finally, we managed to sort it out. I changed the time of the webinar, daily webinar I hold, so now it's much easier. But, so,
well, really nice to meet you, and you know, your reputation precedes you in here, 50. I'm interested. We know we're familiar with your work and what you do. You know what would be interesting is if you could just tell us a little bit about the beginning of your journey and how you ended up becoming 50 pips.
yeah, I mean, first of all, what I'd like to say is that, and more importantly, I'm really happy to see you're back, Dale, because I remember there were some tough times in the past, and I know you're a fighter, so I'm really happy to see you back in the ring and doing this every day. So, you know, I really mean it. There's a lot of BS on the internet, but believe me, I'm happy to see you around. So it's really good to be able to come on your show.
Thank you, my trading warrior brother.
I mean, you know, those are the really important things, right?
Yes,
and I mean, in terms of me, you know, a lot of people always say, oh, why do you want to talk about yourself, right? And I'm just not a big fan of talking about myself, because what I think is important is really the message or the content that we can share online, right? So online it's a great equalizer. So what I want people to focus on or listen to me is not because of where I went to school, how much money I'm managing, etc. What I want them to do is just take some time, listen to what I'm saying, and if the message resonates, if it helps you, then please listen a bit more. And if not, you know, there are a lot of other fish in the sea, right? So I just think that a lot of people get bogged down on trying to justify their message or what they do by, you know, whatever their background. Whereas what I just like to be very discreet and just focus on the message and let the charts do the talking. But one thing which
like that. Let the charts do the talking. That's a great.
You know, that's the key thing, because all of a sudden, the moment you start, whether you want it or not, the moment you start telling people, oh, I manage this kind of money, oh, this is my car, this is where I went to school, except anything, right? It automatically gives people some kind, it forms an image, right, of who you are, what you represent, of whether they should pay attention, whether you're good or not. Whereas the only reason of The only thing behind the message is the content, right? If you say this is going to happen, if you say I think this is this kind of, and it actually plays out over time, not after a week, right? But after a year, after 2 years, after 3 years, then it probably means that that person has something to say or resonates with you. No, it doesn't matter.
I agree, 50.
Right?
There are a lot of $10,000 millionaires out there. Do you know what I mean by that? You
exactly.
know,
but I think one thing which
they
is
lease the Ferrari and they have the trophy girlfriend and
how many Nobel laureates went bust, right? So,
yes.
But I think what's interesting for your listeners from my background maybe is just that, you know, I'm completely self-taught, right? So
Yes.
classical, very classical college, grad school, corporate life, right? Grind, working hard. And then just always being interested in the market since I was very, very young. And then one day just said, you know, if I don't do it now, I'm never going to do it, quit everything and started trading full time, right?
How long ago? How long ago?
15 years plus, something like that, maybe.
Okay. All right.
But, and, you know, and it's just been a school of trial and error, you know, especially for somebody who's come up since you're young reading about, you know, value investing, Buffett, Graham, Dodd,
Yeah.
all the classicals, you know, market wizards, etc. Then, unfortunately, when you get in the ring, you realize that it's a different world, it's a different market. You're talking about different sums of money, and you know, it's very different, right? So you just gotta try and be a humble student of the market, try and take in as much as you can, and try and separate the crap from what is really going to be helpful. And mine was, I think, pretty much similar to most people who trade, just a long journey of trial and error. And
Yes.
because I'm stubborn, probably also I never had a mentor or anybody. I just, anything I found interesting, you know, I'd read everything, I'd listen to everything online, whatever, and then I just go look at it for myself, right? And see if it worked for me, if it didn't work for me. And then you chip at it every day. You know, everybody has to understand that this business is about making a living, right? Again, it's about making a living. It's not a business that's about hitting home runs. Now, if you do things right in your career, sooner or later, you'll hit a couple of home runs. But if your base case is, I'm here to hit home runs, you know, you're going to be emotionally, financially, everything bankrupt, right? Because it just ain't going to work. You have to be in a position to come back every single day and fight, and understand that the only way to do that is to stay small, right? And because whether you like it or not, everybody relative to their account size has the opportunity to ramp up, in brackets, silly leverage and try to make, has the potential to make any single day a return which is silly money compared to what your account size is. But that's not a way to build a long-term track record, and it's just not going to happen. If you trade that way, sooner or later you're going to blow up. So you have to accept.
So have you ever heard my song, Use Less Leverage?
Anyway. I was wondering if you're going to play a little song for us today. But,
yeah. No, the guys at FA have begged me not to. But
okay,
yeah, so, you know, point well taken on be small and grind it out. I know Blake does that. You know, what's on the internet is a lot of delusional stuff about, you know, 4-figure returns in 6 months, etc. So let me ask you this. On that journey that started 15 years ago, and I ask everybody this, I'm curious if you're in the range. How many years did it take while you were chipping away and had perseverance to make a breakthrough to become a profitable and more consistent trader?
Now, again, you'll see most people find me to be difficult because I always never really answer questions the straight way.
I'm okay with it.
Because questions, it's really, you know, the question can frame the answer, right? And
yeah.
What I think is that, everybody's so obsessed about this profitable trader, right? Become profitable. Yeah. What does become profitable trader be? Does it mean profitable every single day, every month, every year, you see what I mean?
For me, right, good point.
It's gonna mean something different for everybody else. So it's kind of like people, what do you think the euro is gonna do? Today, next minute, next hour, next quarter, you see what I mean? So
yeah, I do.
To answer your question as a general rule, you always have to quantify things. So I'm gonna try and quantify my answer. I think that, and it's hard for me because it's a constant process, right? It's a constant process. I think
you're not growing, you're dying, right?
Yeah, but I mean, it's also, I was lucky to have some money aside so that I didn't have to live off my trading, because if you do that, you're asking for trouble. So for me, the question is, at what time do you feel, I think the big question is, after how long do you think I got this, right? So regardless of how much money you're making, because your account size may still be small, is at what time do you think, okay, no matter what happens, I'm gonna show up tomorrow. I'm not gonna blow an account, I got this. It might take me 5 years, it might be 10 years, it might take me 20 years, but I'm no longer in a position to not show up the next day, right? Now, I always traded very small account sizes to start with, so I knew that if I blew an account and I blew my fair share, I'd still be there the next day because I didn't have it all in one account. But yeah, I think it's for
great transparency.
Probably 3 to 5 years, right? Yeah. But I'm going to tell you why it's difficult, and I don't think I've ever told this to anybody. I don't think I've talked about this, but I'll tell you why it's difficult for me, because when I quit my job, basically I set myself up to basically trade a value fund, right? So I was trading deep value, Buffett kind of style, right? I'd done that for maybe 10 years on my private account while I was working, and I was net profitable every year. So for me, it was, hey, this is a done deal, easy, right? And then when I started trading, the markets were different, stuff happened, we started to hit in rough patches, and I realized that is just with the money I had, there was no way I could sit on a position for 3 years waiting for it to pay out, because I need to pay the bills, right? That's the other thing you realize. So even though my strategy was profitable, I could not live off that strategy, because I needed, I had to change the way I was trading. So from then I started to trade stocks a little bit more aggressively. Then after that, I got introduced got introduced and started trading Forex. Then I was trading a mix. Then at one point I just quit stocks altogether and I moved. So my journey has evolved into pretty much what now is just very speculative trading on future commodities in general, right? Right. But it started very, very early. It was started with me being profitable. I got this, but the problem is I got this wasn't generating enough returns for me to live. So then I had to go through a whole different process and reinvent my style. And that's one of the problems a lot of people have in general. When you tell them what would be realistic return, they go, hey, I can't live off that. I go, hey, the problem's not the strategy, the problem's your account size, right? And what you have to do is you have to find a strategy that works, and then that has to make sense based on how much money you've got. And usually, even for people who kind of got this, the problem is not understanding how to trade. The problem is that they are trying to make a living on an account which is simply too small. They are underfunded, so that forces the devil. That forces the devil, and you get in all kinds of trouble, because it's the dirty little secret nobody's going to tell you. This business, as much as the maths is linear, ain't linear. It's much easier trading a $1 million account than a $1,000 account. It ain't, you know, and you're not going to trade a $1 million account the same way you trade 1,000, no matter how much everybody, when they started trading, they wrote their business plan in Word, they put a spreadsheet, they put in a graph which has a beautiful how much I'm going to compound my returns if I make 1% a day with this leverage, and I'm going to keep on trading this when I have 1,000, 10,000, 20,000, 1 million, and look at that curve go. It just doesn't work that way. You don't trade the same leverage. You don't trade the same way when you're trading a 7-figure account than when you're trading a 6 or 5 or 4, right?
How is it different? For people, I understand, but for people who don't, how is it different? What are the major differences between trading a 7-figure account and, say, a low 4-figure?
Well, the difference is, first of all, that if you're trading responsibly with a bigger account, you can get away with murder in brackets, right? You're a lot more flexible. You can put on a lot more positions. You can stay smaller. You've got a lot more breathing room. You know, another thing is also, depending on the size you're executing, there's just certain things you can't trade, certain things you can't, like scalp, you can't get in. But I think the interesting discussion on a smaller account versus a bigger account is everybody thinks, oh man, if I trade like 1 to 10, 1 to 20 leverage on a smaller account, once I get to trading a bigger account, man, that's going to be awesome. Whereas the reality is that, at least as far as I'm concerned, you know, the only thing I can offer as my perspective is that the bigger your account, the bigger my account, the smaller I want to trade in terms of leverage, because stuff happens, right? So yeah. There's no way I'm going to be, you know, as much as if I'm forced to trade.
You'll even become more conservative with bigger money.
Well, you can afford to be, right? But as much as you'll be forced to trade double-digit leverage on a small account, you know, you get into a bigger account, you know.
You don't have to.
You're happy. Yeah, you're trading 1 to 4. That's not, you know, come get me. You know, it's okay. And the question is, oh, I can't wait till I'm trading a $10 million account because, you know, look at that return. Hey, that account, I'd be trading 1 to 1. You know, maybe pressing it 1 to 2, but you know, you don't need to. And that's, everything becomes easier, right? You're not worried about having to draw some money to pay for some kind of medical bills or whatever. Something happens, you're just so much more relaxed. And,
nothing going on but the rent, huh, buddy?
Right? It's this business is about putting yourself, you know, what I always tell people, and I found something strange that I haven't really read in all the literature and all the books, is that something which I've been saying for years is that when you become a trader, when you become a self-directed independent trader, you have a huge luxury. And the luxury is that in life, especially if you work for somebody else, if you have to go to the post office, you have to go to school, you have to deal with people. You are forced to deal with people you may not want to or not have the patience to deal with, but that's part of life. When you decide to be a self-directed trader by yourself in front of the screen, you have a mega luxury. And that luxury is to create your own positive reinforcing ecosystem, and you ain't gonna let anybody that is not gonna help you or be a positive influence in your life in that bubble. And so many people don't take advantage of that. They don't take advantage of that by letting in too much noise, too much mess, too much stuff, and you really have to insulate yourself and get yourself in a position of Zen with only positive influences. And of course, everything that can keep you calm, rested, refreshed, and you know, not too much pressure. Whereas what do people do? It's a
lifestyle. It's a lifestyle, right?
What do people do? They trade. They think, I need to make, I got 3 ex-wives, 2 lovers, and nasty habits, and a $1,000 account. Let me start trading for a living. I only may have to make 400% to pay my bills, right? So starting, they're putting themselves in a condition to fail. Then they follow 2 million people on Twitter sending trade calls, so they're bombarded with trade calls. Then they lever up. Then they're going to blow up, right? It's just because it wouldn't be human to be able to put in those results and to function with so much influence and so much mess. And they put on 25,000 indicators on the chart, right? Instead of making it, as I always say, this is as hard as you want to make it, right? Put yourself.
50, do you know what the two most rare statements made on Twitter are? Take a guess.
I lost, and I don't know.
I don't know. I don't know, because your ego won't let you say that, because then you think you're dumb. Or I was wrong. I don't know, or I was wrong. Try and find that on Twitter.
Did you see the?
Do a search. Do a search.
You should see the. Let me see if I can bring it up. I'll read it out to you. The thought of the day I posted in my blog post today is quite funny, actually. So let me just read it out. Just if you can. So it's from Victor Niederhofer, right? So if it's from Education of a Speculator, it goes, like most successful people secure in their trade and stature, I tend to emphasize my losses. The main reason is that it keeps me humble and essential for success in this field where one false move can lead to irreversible disaster. This is what the business is about. The business is about booking losses, but not letting those losses bankrupt you. You know, even a 50-50, yeah, it's hard. Even a 50-50 trader is a star, right? If you've got a good expectancy, but that means
if your R is good, you're making money.
Yeah, but that means that Dale, think about it. It means that 1 out of 2 times you're getting slapped in the face and you're saying you suck, right? So imagine if at school you failed 1 out of every 2 tests. Imagine if you had a fight with 1 out of every 2 people you met. Imagine if you had a driving accident once every 2 times you took the car. It's so much pressure to be able to take this. So it's, you know, not everybody's wired to trade, but you really have to work on that and understand is it ain't about Instagram, right? It's about making a living day in, day out, eating humble pie, because if you don't, the market has a really good experience, good way of making you eat humble pie, right? But that's why you can tell who's been around for a while, because you won't get somebody who's been around for a while who's very, very cocky, or the only time they will be is if they made a killing and they stopped trading and they're no longer trading and they still remember that. But if you actively trade every day, it's very hard for you to not be humble because the market takes care of that, right?
Yes. So any reason you have the VIX chart up here today?
Not well. I just brought up a charting part for instead in case we're going to talk charts. But you know, I think what I said on Sunday is that, you know, I'm just tired of people emailing me or messages on the blog saying, how do I short volatility? How do I short volatility? It's like, just to make clear to everybody, as I said, there's far more chance that this week we're going to be somewhere in here into Thursday, Friday than we close below 9, right? This just, again, it's a big accident waiting to happen, and most people have never lived through anything like that. And it's just really sad that, you know, it's always the same story. People just think this time is different, this time is different. And it's the complacency is shocking, right? It doesn't mean that you can't trade a low VIX environment, but it's for God's sake, if you're a newer trader or anyway, so
yes,
you
this
have
is not
no
normal.
business. You have no business trading VIX. You have no business shorting VIX. If not, you're going to find out the hard way, and it's a painful way.
Yeah, like, you know, lowest reading in what, 25 years, 50? And, you know, kind of reminds me of, you know, up near the highs in Bitcoin too. So, yeah, people have this belief that what's happening today is going to go on forever. And we know that things always change. It's just a matter of how far rubber bands can stretch. And I've seen them stretch longer than I thought was imaginable before. Yeah,
we look at NASDAQ 98, 99, even 98, everybody thought, you know, we'd blown off the top, and then it still caused a lot of pain. Now, I think what I'm trying to say is, just to make sure, is I'm not saying that this is the, let's get the ES up here. I'm not saying that this is the end of the world, right? That it's the end of the world and we're going to die and we have to buy some bomb shelters, right? But what I'm just saying is that we've reached a point where everybody thinks that a 1% move down is a correction, right? So sooner or later,
because it has been.
Yeah, but but sooner or later we're going to get the S&P is going to be down 100 or 200, or it's going to be down 100 on the day. And don't be the person who's forced to be coiled up in the fetal position under your desk because you thought it couldn't happen. All I'm saying is entertain the fact it could happen, and that healthy markets move both ways, and that the longer something, you know, you get this stuff is contained, the more aggressive the breakout can be. Now that's all we're saying, but you know, for now it's moving higher. You've got a very healthy dose of debate on Twitter, but you know, any move back into the moving averages is going to be buy a dip until it isn't. But don't put your, it's just, I have no problem if you want to buy intraday and you're looking to trade this to the long side because the chart is long. What I have a problem is when I get people emailing me or writing me saying, oh, I liquidated a bunch of money. I want to put it all in the market in my IRA or in my retirement. If I want to buy in because it's going to go too high. It's just, you know, pump the brakes.
So you're starting to get that. You're starting to get that stuff now, or for a while.
Yeah, I've been getting that for a while. And again, it usually lasts longer than you think it will.
Yeah. Yeah, but they say that manias first break the people who bet against them, then break the people who bet on them.
Yeah, I got a couple of people in my room that that keep on bugging me every day. They go, hey, 50, tell me when you're going long equity so I can get short, right? Because they think I'm going to be the last one to when I get bullish.
Yeah, people, I know. People love to.
That would be the signal.
I wouldn't fade you, buddy. So why don't you show people how they could, besides follow you on Twitter, maybe show your business model, your trading room, and if people are interested and, you know, want to hang out with you, go ahead.
Yeah, I mean, just I don't have it up here, Dale. Really, I mean, the point for me here is to shoot the breeze with you. I mean, if I've always been.
I'm enjoying it. It's great to know you. Okay, you know, I felt like I knew you, but now I feel like I know you more.
Yeah, because we've seen each other around for a while. I think if people want to find me, it's not that hard, right?
Okay,
so
all right.
I always have a feeling people who want to find me they'll find me. I mean, but thanks. But yeah, you can look me up on Twitter. There's a link to the blog, and there's stuff we do there if you're interested. But you know, here we're shooting the breeze on some charts. Is there anything particular you're looking at or you're focused on?
Well, you know, maybe a quick view on what's been happening with dollar weakness. If you think this dollar weakness is, the big question is it cyclical or secular? That's 104.
Yeah, that's an interesting one, right? And I think here the problem is you see a lot of, in my mind, again, junior traders are getting excited trying to make that decision in the 2-3 days ahead of the BOJ and ECB, which is really not the time to get focused.
So are you flat for red events, 50? Do you get flat for red events?
Depends, but here I think what's important for traders to understand is when you're coming into the week, right? When you close the week at lows, right? And you're going into the week when it's basically a dead market into a couple of high volatility events, the most likely mode the market is going to be in is called, very technical, seek and destroy. And that means it's going to extend when it closes at the lows and the highs, and it's going to cause pain. So if you close Friday, as I said in the video, with trying to get long end of day on DXY with a stop below lows, or short Aussie with a stop above highs with what I call fortune cookie stops, it ain't going to work, because that, you know, most likely here is going to be a pain trade until we get into that BOE, ECB, BOJ. Now, structurally, for me, the most interesting question, I'm sure you got a bunch of good guys in here, so they've probably analyzed this chart in a gazillion ways. So one thing which I think is really interesting here, apart from the fact that I don't think the structural dollar bulls are really not going to panic unless we start to trade below the 200, right?
Yeah.
For me, the interesting question is here, assuming we continue to see some kind of dollar weakness, right? And assuming we get ECB does what it has to do, et cetera, et cetera, et cetera. Is there going to be a point at where despite the fact that there is a structural dollar weakness, the equities roll so hard that you're going to see that bid coming into the dollar. I think that's the most interesting play on the board in terms of asymmetric risk reward if it sets up.
So the the surprise correction that's more than 1% that should be a minimum of 7 to 10 in my view, even if it's just a pullback to 22.5 or something like that.
Yeah.
You believe that money flows are going to come back into the dollar during that scenario?
That's the key question. I think if we get a correction that's like slow, kind of 1 or 2% a day in equities, even if it lasts 3 days in a row, 4 days in a row, and it ends up being 5, 6, 7, I think nobody's going to panic. They'll still buy the dip. I think if we get a down 3, 4, 5% day, that's when something could snap, right? I think that's, that's where I think something interesting. But right here, there's very little reason to believe to believe that the dollar should be very, very strong, right? But having said that, I think it's not cheap enough to buy and it's not expensive enough to sell if you're looking for the next swing move. You see what I mean?
It's a no trade for you here.
Well, not really on pure DXY. There's no, right here, if you're flat, there's no trade, right? There's no trade. Now, there may be a very nice trade on a move lower, closer to that 200, or there could be a very nice trade on a rip towards the end of the week.
It's no man's land, so you do nothing. Sometimes the right thing to do is nothing.
Yeah, or sometimes the best trade on the board is a trade you're already in. If you're short here, you're going to try and milk it until Thursday, right?
Right. Good point.
But that's the so I don't think it's particularly interesting. And again, really, honestly speaking, you got 3 dead days ahead of an ECB or BOJ. Who with any decent kind of size is going to want to put a big swing bet on before Thursday, Friday, right? It's only retail playing it out, trying to do something. But there's no big money trying to be put to work right here, right now. It's going to be towards the back end of the week, right? So much prefer to let the market come to us than try and chase it here when it's just these fortune cookie stops getting taken out. Now, that doesn't mean there isn't an interesting intraday opportunity, maybe to fade Aussie here for 10, 15 pips into the end of the close, into the end of London. There might be a little things to do, but structurally, we got to wait till the end of the week, right?
Yes. So I want to thank you, 50, for sharing your philosophy with us today.
Hey, my pleasure, Dale.
If you listen to any of my interviews, I'm usually doing more talking and interrupting. And with you, I found myself doing a lot of listening because there were so many pearls in this interview that, there are more important things to learn than where should I buy this and where's my stop and where's my target. You got to a lot of the psychology of the business, and I'm grateful that I got to know you and talk to you, and proud to call you my trading warrior brother, and may pips rain down on you and your bubble and get through the bubble, the Zen bubble you've created. And
we can open up a little hatch for the pips.
Anyway, 50, really, thank you very much for edifying our community today, my friend.
Thank you so much, Dale. It was a pleasure, and again, I'm really happy to be able to stop by and share my 2 cents with you guys. And again, I'm really happy to see you around. And honestly, now that I've changed the time of my daily webinar, if you're ever strapped for guests and you want somebody to shoot the breeze with, hit me up, and I'll be more than happy to come back on if I haven't bored anybody.
You know what? That's a for sure thing. That's a deal, 50. Thanks again, buddy. I look forward to the next time we get together. So that's it. That's it, Face. Everyone thank 50 Pips. You know where to find them, as he says. Great analysis today by Steve Volge, as usual, and Blake, and Greg had dropped by for a little crypto coverage. So before you go, you could click that link on click the link here at right here in GoToMeeting, and give ForexAnalytix a shot. And I want to thank everybody. You're welcome, Bill, Mike, Kevin, Anna Kogan. I know that name. Anna loves 50. All right. You're very welcome, Adam. All right. Enjoy your summer day. See everyone tomorrow. Remember, most of all, don't just count your pips, count your blessings. I'll see you tomorrow.